Hey traders, Jim here. Just wanted to go through our trades finishing out last week. We made a trade on Friday. Nothing else on the week itself, but I want to talk about a couple things that we did make some adjustments on. So first and foremost, on May 1st, I went ahead and added two contracts of SoFi at the 15s and added into the account $163.45. And that's a 25% annualized rate of return. So not a bad trade at all. Now, if we go and take a look at current balances and all of that, we're at 5404.48 for total premium collected. Current balance 75,404 and 48 cents. An adjusted balance, which is your current balance minus your unrealized profit and losses, is $73,823.73. Now, I've added a couple things to the trading journal because I want you to have a full picture of everything you guys are doing. If we look at the current balance in the 5,404, based on where we started and where we are at the year right now, the deployed capital, which is 67%, we're returning 10% already on it, and annualized return of 34%. And that's not compounded, by the way. Return on the total account, and that's the money that I've got in my money market. The rest of this, 33%. Not quite, because I've got a little liquid. But that's 7.72%. Then we do not include the money market. And the annualized return so far is looking towards 24.5%. Now, that's not compounded again. I'm staying very conservative. So what did I add? So if we go down here to the total profit and losses, premium collected, win rate, open trades, closed trades, wins, losses, unrealized, of course, is that unrealized. If you hover over that, it's going to tell you that's your current profit loss on open stock positions only. All right. So we're down 1,500 on our open stock positions that we have covered calls on. Well, if you have a covered call on your open stock, you're probably down in the stock to write that covered call, right? There's sometimes if you write some out of the money ones, a buck or two, $5, $10 out of the money, and stock does come up, it is possible to get this in positive. But most of the time, if you're trading the wheel, you're going to have this as some type of negative. So I added this little column here, earned mode, premium collected. That's what you're looking at here. But I also wanted to show you what happens to all these numbers if we just look at the closed trades. Remember, we're trading some of these pretty far out. I've got some November trades on here that are covered calls. I won't see that money reflected in the total balances in my Thinkorswim account until we get closer to that, till that theta starts closing in time. So here, if I only go to our closed trades, these are trades that I booked money on the premium collected, but the account shows it against us because of the fact that they're still taking the ask price off in case we close out or we take a loss on that. It's still a risk. We always say we'll never buy back that ask price, but in fact we do quite often, and hopefully we'd still make money on it. But if we go to the closed only, so far in the year, the realized profit and losses now are $2,087. And that doesn't take into the unrealized. You can do your math on that because that's the stocks. So these are closed. So now if you take a look across the board, we're now at 4.15 on money deployed, 13% annualized on that, 2.98 on return on account, and 9.46 on return on total account. Now, what's going to happen is I just started this account in January. This is expected. But once we get through the first year, this will all start to even up going into next year. The money will start looking a lot better from what's actually closed. The open positions are still catching up with us. Okay, so we go back to collected. I have $3,316 of unresolved premium in 16 open positions. Important to understand that you take that other number of closed trades, add it to the money that we still have in unresolved premiums, and there's your total premium collected, okay? Second, let's go over to the income breakdown. So the income breakdown also gives you the opportunity to do the exact same thing. Let's close this in March. So I made it so the income breakdown will also go by whether you're closed only, okay, or whether you are total premium collected. And you saw that if you go back to February, minus $2.90. This does not reflect any of the premium we collected on trades that were still further out in time. So it's as accurate as you're going to get on all of your realized closed trades. But if we look at all the premium collected, we go back to here. Now, if you remember April or any of these numbers, the overall number is correct. These other numbers down here were larger in my previous video. And the reason for that is if I took a trade, let's say, for example, in January, and that trade didn't expire until April, and I bought that back or took a loss on that, it didn't expire, just worthless, because then nothing happens. But if I bought that back or took a loss on that, we sent that loss back to January or February or March, wherever that trade was opened. Okay. The problem with that is then it won't line up with a good income planner. How can you plan your income if you're taking a future loss on closing something and sending it back to the original trade? And all of a sudden, these numbers down here change. So what I did was I did a little bit of an accounting ad here, and we said that if we take the loss to close the position, so let's say I made $150 on a position and it cost me $25 to buy it back, I'm going to take that $25 when I bought it back in that month, not send it back to the month that we actually made the trade. And that allows you to plan better for how you're going to take your money out of here. All right. Very important key distinction. And I'm going to make some deep videos and all of this later on, but I just wanted to give you guys that. So if we go to April, yeah, this gives you a great view. Couple things. You'll see the buy to closes. These are the ones that we bought to close and when they were open. So you can go back and look in March and you can see that a trade if you want to do that. So there's a lot of data in here. You don't have to get this deep in the weeds. I like seeing everything that's going on at a glance so I can go back and see, okay, there's where that trade is. I bought it to close. That's right. And I made that trade in March. Second thing is you'll notice that this negative's red when this negative's green. What that simply means that on the original position, minus the buy to close, we still made money. Very important. This one here in red says that on the original position, the buy to close cost us more than we originally made, so we lost money net. All right, so it's at a glance. You can see it. You don't have to get too deep in the woods. It just helps you to really look through your account and understand what you're looking at. All right, that's it for today. Come on over to optitrades.com, OPTYTRADES.com. Take a free trial, come on in, check everything out. We've got some pretty neat stuff here. Also, don't forget to like and subscribe. This helps our channel huge. We're just really getting the channel up and going. And if you feel this information is relevant for you, we're going to be holding a lot of classes coming up. We're going to do a lot of stuff with how you should be trading, how to look at different aspects of the wheel strategies, and maybe some other options plays as well. We'll see. I've got 30 years of trading experience, been doing this a long time. Have a great day, and we'll see you in the next video.